Today, let's dive deep into SoFi and analyze its recent performance, focusing on the data that shaped its trajectory and what lies ahead. If you're curious about what's been happening with SoFi and what could be next, stay tuned as we break it all down in detail. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi wrapped up the day with a 2.49% decline, closing at $14.71 after reaching a high of $15.62. Initially, the stock showed strength and climbed during the opening hours of the market. However, the release of JOLTS job data triggered a significant sell-off, impacting SoFi along with the broader market. This wasn't entirely unexpected, given how economic indicators often drive market sentiment. The volume for SoFi reached 38.4 million, slightly below the average of 45.3 million. Despite the decline, there were notable instances of big money investors buying into the dip, signaling confidence in SoFi's potential even amid broader market turbulence. One factor contributing to the sell-off was algorithmic trading, which amplified the downward momentum. While the broader market saw widespread declines, SoFi demonstrated resilience, with significant buying activity that wasn't as visible in other stocks. This suggests institutional interest remains strong, even if the trading volume and frequency were somewhat muted compared to usual levels. Interestingly, there wasn't any specific news tied to SoFi that influenced its movement today. No fresh SEC filings or announcements. The stock's performance seemed to mirror the overall market's reaction to the JOLTS report. The job openings data showed 8.09 million, higher than the forecasted 7.69 million, suggesting a labor market that remains tighter than expected. This outcome reignited concerns around Federal Reserve policy, particularly as Chair Jerome Powell has consistently emphasized the importance of labor market conditions in shaping monetary decisions. The upcoming FOMC minutes could shed light on how policymakers view the current labor dynamics, and this might cause further ripples in the market. With fears of a potential interest rate hike resurfacing, many investors are bracing for heightened volatility. SoFi, like other high-growth stocks, remains sensitive to such macroeconomic factors. Beyond macroeconomic concerns, some analysts have raised questions about SoFi's valuation. The stock's price-to-earnings (PE) ratio currently sits at 115, far above the typical range of 30 to 50 for similar companies. While SoFi continues to grow and innovate, Wall Street often struggles to appropriately value disruptive companies. Critics argue that the elevated valuation may not be sustainable, though SoFi's defenders highlight its potential to transform the financial industry. Short sellers didn't play a significant role in today's trading. Despite the broader market's pullback, short interest in SoFi remained relatively unchanged, with a modest increase of 20,000 shares. Currently, 12.93% of SoFi's float, or approximately 137.86 million shares, is shorted. However, during the day's dip, some short sellers chose to cover their positions, reflecting a mixed sentiment. In the options market, activity was relatively subdued. Call options accounted for $17 million in premiums compared to $4.7 million for puts. Interestingly, 45% of options traded were bearish, indicating that some traders expect further downside. Over the past few days, options volume has been gradually declining, with today's total premiums reaching $21 million compared to $26 million on previous days. The consensus strike price for call options this week appears to be $16.50, though optimism for higher levels, such as $18, has significantly diminished. Looking at technical levels, SoFi ended the day at $14.91, just below the important $14.83 support level. After-hours trading saw the stock hovering around $14.88, keeping it close to this pivotal point. If the stock fails to hold above $14.83, the next support levels to watch are $14.01 and $13.50. On the flip side, if SoFi manages to recover, resistance levels at $15.65 and $16.16 could come into play. On the chart, SoFi closed just below its Arnaud-Lagu moving average, ALMA, at $14.89 and slightly above its 50-day moving average of $14.46. Historically, when SoFi breaks below its 50-day moving average, it often experiences further declines of 15 to 20%. This pattern could explain why some institutional investors are hesitant to buy at current levels, possibly waiting for a deeper dip toward the 100-day moving average, around $11. The broader market's reaction to today's events will be crucial in determining SoFi's near-term direction. Was today's decline an overreaction to economic data, or is it indicative of more significant challenges ahead? Investors will likely remain cautious until more clarity emerges, particularly with earnings season approaching. In conclusion, SoFi's recent performance reflects a complex mix of market forces, economic data, and investor sentiment. While the stock faces challenges including valuation concerns and macroeconomic headwinds, it continues to attract attention from big money investors. As always, understanding the broader context and keeping an eye on key technical levels will be essential for navigating the road ahead. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.